The road to the NBA Finals ends here, with star guards setting the tone. The Cavs eye another upset, while the Knicks carry the dreams of all of New York. The Eastern Conference Finals continue on ESPN and ABC.
Welcome to Fintech Insider Insights from 11FS. I'm Benjamin Ensor, and today we're unpacking a big question. What happens when artificial intelligence starts making investment decisions for us? Investing has always been about judgment. It's about deciding what matters, when to act, and how much risk to take. But that starts to change as we move from a world where technology can help us analyze markets to one where it can act within them. Not just suggesting what to invest in, but deciding what to buy, what to sell, and when to do it. And that starts to create a whole different set of challenges. Because unlike payments, where an outcome is immediate, investing plays out over time. Decisions compound. Mistakes aren't always obvious. And accountability gets a lot less clear. So this isn't just about automation, it's about delegating judgment and uncertainty. So that's exactly what we're going to explore today. And I'm delighted that I'm being joined by a panel of three brilliant guests to explore this. So first up, we have Jannick Malling, co-founder and co-chief executive at Public.com. Welcome back to the podcast. It's a pleasure to have you with us again. Can you remind our listeners a little bit about Public and a little bit about you?
Yeah, sure. Hey, it's good to be back here. So Public.com, investing app in the US, building what we call the first real agentic brokerage, which lets you install AI agents directly within your portfolio in a safe, easy, transparent way to help you carry out anything from research, trade execution, building, implementing strategies, portfolio rebalancing, cash management, monitoring of markets, risk, and much, much more. And so spent, I would say, the first we launched in 2019, and so we spent sort of the first few years building this like multi-assets infrastructure of bonds and equities and crypto and a bunch of other asset classes, retirement accounts, brokerage accounts. And then I think since 2023, we've been quite deep in building AI, this agentic brokerage model, basically AI within your portfolio that can, starting with research, and then we've recently launched the ability for agents to help with trade execution as well.
Which is super, super exciting. I'm also delighted to be joined by Megan Caywood, founder and chief executive at Caywood. Megan, welcome back. It'd be fantastic if you could also tell our listeners a little bit about you and a little bit about Caywood, please.
Yeah, absolutely. So I'm an American by background, but I've been in England for about a decade now, so working in banking and finance. So previously, I moved over to help start Starling Bank and then was over at Barclays for a bit working on consumer banking technology. And now Caywood is an agentic AI firm that builds financial management software for banks and corporates. So very much in the banking, fintech space, but now focusing on AI.
Very exciting to have you with us. And I'm also delighted to welcome Peter Rossi, who is a technology and AI advisor to private equity and co-founder of HubbleField. Welcome to the show, Peter. Could you also introduce yourself to our listeners, please?
Great. Yeah, thanks. My name is Peter Rossi. I spent the last 20 plus years in tech, so designing, building and scaling platforms across quite a lot of verticals. Started my career with McLaren in Formula One, traveling with the world with them. I spent 10 years in venture capital backed tech startups, and most recently spent 4 years in a PE backed buy and build in the certification space after selling my SaaS business to them. Now I spend my time split between advising PE and VC funds in what's real in AI versus hype, helping their portcos as well. The thing I'm most excited about right now is HubbleField, so an agent native discovery platform for private markets that the team are working on launching at the end of the month. Makes me slightly nervous in this conversation today because I've got skin in the game about it. So there you go.
Oh, that's exciting. Okay, well, I love what you said about trying to distinguish the sort of hype from the reality. So why don't we start with the basics? Megan, I think I might come to you first. We've had quantitative investment strategies. We've had machine-driven investing for decades. What's new and different about bringing AI and specifically agentic AI into investments? What does that enable us to do that perhaps we couldn't do before?
Yeah, I think it's a great question because to your point, we have had AI and machine learning in banking for a long time. I think originally, if we were to rewind, 10, 15 years ago, it first started coming out really with machine learning applied at transaction monitoring, so to combat fraud, and that was actually very highly effective. I think if we then kind of speed up a little bit, fast forward 5 years, then we would have the advent of robo-advisory, and that was quite interesting for algorithmic processes underpinning trading. I think now if we look at what has shifted, we went from AI that was predominantly machine learning to Gen AI, which is the brilliance of LLMs, and now agentic AI is the execution layer on top of that. So agentic investing is not just automation, it's intent translation plus continuous action. And that's really what is new. So automation executes a known instruction, whereas agency interprets it, chooses among other paths, and acts over time. And so what we have now is not just the brilliance that we previously had before it, but the ability to enable it to act and deploy and to make decisions, to have nuance, and to play a role it didn't previously have, I would say is the most recent development.
Indeed. And we've started to see a number of sort of firms starting to use agentic AI in various ways. We've seen firms like Citi building internal AI agents to support wealth managers, taking on tasks like portfolio analysis, market research. But then we've also seen firms like Moomoo letting customers connect their own AI agents directly to trading infrastructure. And of course, Jannick and your whole team at Public introducing these AI-powered portfolio agents sort of directly into the investing experience. Jannick, can you tell us a little bit about what you see as the sort of the opportunity? What made you at Public say, hey, this is something we absolutely want to get behind and offer to our customers?
Yeah, I think in Mega's sort of framework, I think all the machine learning that have been used to sort of combat fraud and these kinds of things haven't been things that really dramatically improved the user experience. They've been sort of like behind the scenes, sort of lower down in the income statement also. They haven't necessarily driven in a very directly attributable way a lot of top of funnel growth. But they've helped made financial technology firms and banks and such way more efficient. And then I think the move to LLMs, and I would agree specifically the shift to reasoning models, have really been where you can sort of rebuild your entire user experience around that from a consumer perspective. And so just to give the background, we started in 2023 with like being the first to sort of embed research directly into the investing app experience. So you're on the Apple stock page, you swipe down, you can ask any question you want. It can be like, hey, how many iPhones were shipped this quarter, this, that, and the other. It goes through all the statements. And so that became just like a several order of magnitude faster way to do research. It also gave us a very interesting viewpoint into what people are actively thinking about, which we necessarily didn't always know when they were just hitting the buy and sell buttons prior to that. And now it's sort of evolved to having this agentic layer that Megan also refers to, where you are really moving more from placing orders to instructing intent. So, the financial markets have always ultimately come down to you place a market or a limit order at the end of the day. And now the user experience is changing to be one where you can be like, hey, if NVIDIA is down 5% on the week, or the stock becomes cheaper on a PE multiples basis after an earnings call, start adding to my position. And so you're more instructing agents with these like general objectives, which creates this abstraction layer between the grunt work, if you will, of actually placing orders, moving money around. Hey, every time I got money in my checking account earning zero, move it to my bond portfolio. Like, we've already seen hundreds of thousands of examples of how people sort of help automate a lot of workflows in their portfolio, how they sort of get to a setup where they're just more sophisticated, I suppose, and a little bit more intelligent about their investing. I always think for the everyday investor, people have asked me, by the way, for years and years and years, like, oh, what does it take to be like a great investor? And I was like, listen, the same if you want to be in the Champions League or the NBA, you got to spend the time, right? Be the first in the gym and the last guy out. That's now actually kind of changing. Now you actually can really get a lot of time back. And so I think for everyday investors especially, which obviously is most of us that aren't day traders sitting in front of a screen 24/7, you miss a lot of moments in the market. There might be weeks where you're not really following what's happening. The fact that you can instruct agents to do a lot of this stuff on your behalf, I think is a huge game changer to that experience. And it even goes further down into like, we're thinking about things like, okay, as a product consumer company, you look at monthly active users, right? That's like a pretty standard thing. Is that really the metric to go for anymore? I don't know. So it changes a lot of like things strategically, even how you build product. And that's why I think that move to reasoning models and LLM specifically was such a big shift versus just, if you will, a lot of the ML improvements that were great for fraud and everything else, to Megan's point.
Thank you. Peter, Jannick was obviously just talking about sort of everyday investors and sort of retail investors, and obviously it's natural to look at this with a bit of a retail lens, but is this also relevant to institutional investors? I mean, you were talking in your introduction about private markets and so on. Do we think we're going to see a shift among institutional investors as well, or do they maybe not need this? Is this an institutional play as well, or is it just for retail investors?
I think it's a really interesting point that Jannick made about the sort of the monthly active users thing, because is it active users anymore, or is it going to be active agents that are accessing your platform, or active tool calls on your platform? Because I think that whole sort of surface, sort of the entrance to these businesses and platforms is going to change a lot. I think with regards to sort of who it's going to be and sort of how it might structurally shift, I think there is a lot going on in the market at the moment. And I think the thing actually wider than this is around sort of how AI is unleashing a lot of sort of sleeping capability out there that, sort of people that might have ended up in careers that they haven't been able to sort of switch into something they might be good at. A really good example of that, a friend of mine is a maths teacher, and he's really very attuned to what's going on in AI. I've been doing a fair amount of mentoring with him, and he messaged me the other day basically saying that he built an algorithmic trading platform that was AI integrated using a Parquet database for high-speed data streaming off of bet trading markets. And he's basically, he's a maths teacher. 6 months ago, wouldn't have had a capability to do that, and now is leveraging a stack that wouldn't be out of place, with a quant working on an algo. So, I think it's going to change a lot. I think you're going to see some really interesting stuff going on out there, and some new people emerging, doing some things. Yeah,
I will say I've somewhat ironically, by the way, my old company before public, which was actually in London called Tradable, was sort of in this world of like API, algorithmic trading stuff. And the biggest issue we had was like the people with the trading strategies could not code on our API. So it was such a small overlap. You're looking for like a little sliver of the market. And then now that Venn diagram just have become fully eclipsed. And I'll give you a wild stat, which is we launched our API public like 6 months ago, probably. And we've been the first to do sort of MCP support and open clause scale and perplexity connectors and clock connectors and all that stuff. And now on a daily basis, 25 to 30% of our volume is now running through API. In the last 6 months, our volumes overall on the platform have nearly tripled. We're talking tens of billions of dollars. And so it's sort of it's by far the fastest growing part of our business right now. But basically just having that ability to just go to settings, grab your API key, and then go do stuff, right? Like it's a little bit that slogan. You can just build stuff. And I think that's just become so true for everyone now. And even in our little world of retail trading and investing, we've just seen that firsthand. I mean, the amount of people we have programmatically accessing their accounts now, like we ask what people's job titles are when they sign up. And so I know roughly how many software developers are engineers, and we're well beyond that. So there's a lot of proof that this is really working.
That was actually going to be my next question to you, Megan, because some of the people that Peter and Jannick are talking about are, as you say, software engineers, maths teachers, people with, good head for numbers, good understanding of the technology. Does this start potentially moving into maybe more mainstream, more I hesitate to say more normal people because I don't want to offend all the all the brilliant software engineers and maths majors listening. But do you think over time this perhaps becomes more mainstream because not everyone's necessarily going to have the confidence to instruct an AI bot to say, well, if volatility in the market changes, do this, or if currencies move like that, hedge that, or whatever. Some people are just going to want to say, help me retire earlier, or help me afford a yacht, or whatever it is that their goal is.
Yeah, I think you're making a really good point, which is it really gives more people confidence to do new things. And so I think on the one hand, it's financial decisions. But I think to what Peter and Jannick were saying as well is it's across a whole host of things. It could be trying different skills, or it could be coding. I was in San Francisco last month, and I was you hear about vibe coding in London, but everyone's vibe coding in San Francisco. I was staying with a friend at a weekend, and she just vibe coded something for fun. And I didn't use that term for it, but when we were starting Caywood, I actually just vibe coded the V1 with the ChatGPT. And it's okay, put all these into these repo files in GitHub, and I sent it to my CTO. I'm like, okay, try this out. What do you think? And I actually similarly, even with our first V1 designs, I had ChatGPT write the requirements for it, hire the designer for it, pay the designer for it, give the designer feedback on it. It was a phenomenal experience. But I think effectively, kind of through my experience testing it and what I'm seeing out in the world, is generally speaking, bringing agentic AI on top of the layer of LLMs is fantastic because it's bringing knowledge to bring confidence to a mass of people to help them to do things and think through things that they didn't know how to do before. I think with financial investing and agentic investing, the reality is that customers don't need to either be very technically adept. They don't need to understand model weights. They don't understand each nuance of the technicality, but they need to understand the mandate. They need to be able to have a conversation with the agentic program that they're using to be able to set the parameters of what the agent can do, know what the agent can do, when it can do it, how to stop it, be able to have a human read journal to, at any given time, understand what's taken place, understand the reversibility of those actions or lack thereof. That's what people need to understand, is just really the capability of the agent. But I will say, I think over time, we've had a lot of conversations on, prompt engineering. You have to be good at writing prompts to interact with agents. And I think that's actually becoming less necessary now because LLMs, at least the major ones, GPT, Claude, Gemini, Grok, and others, are so good at understanding nuance, understanding intent, emotionally relating to users to understand what they're trying to achieve on multiple levels. So it's not just buy a yacht. It might be kind of something else around this kind of goal of financial freedom and a timeline to kind of understanding the fullness of what they're trying to achieve. But then also in moments of crisis, I think what's really interesting is if we were to just rewind just a few years ago, when I was at Barclays, the way that it would be kind of presented about is AI might be able to help you make a brilliant financial plan. It might be able to help you execute that plan and understand changes and flux and respond to the market even more adept than human advisors can. But we really hypothesized that it wouldn't be able to help you with fears. And when the market crashes or something goes wrong, that kind of hand holding that a human advisor could do would be difficult to replace. But I think what we're increasingly seeing is that the LLMs and agents are also able to have that kind of connection as well, to be able to be available 24/7 and to be able to communicate in an effective way to help not only answer people's questions, but to kind of solve some of their anxieties and stressors as well. So I think now the brilliance of LLMs combined, particularly with agency, is this enhanced ability for more people to have confidence with investing, but to do all sorts of different things that they didn't do before in a supported way. So yeah, I think it's a good question.
That's a really, really interesting perspective that AI is starting to be able to understand, or at least know how to respond to human psychology. I'm immediately sort of thinking of the things that can go wrong. I mean, let's say we've got examples of people asking AI to draw them as a doctor, and it goes and produces a picture of them as Jesus Christ. What happens if if people start giving AI instructions that maybe don't make sense? I mean, Peter, your teacher friend's obviously very smart, but we could imagine other people who might potentially instruct AI to do something that actually probably wasn't smart. For example, it might they might say, put all of my cash into, a particular stock, which obviously just leaves them completely undiversified, which generally speaking isn't going to be a great strategy. It might be if the stock happens to be Apple 10 years ago or whatever, but it's often not going to be a great strategy. Do you think we're going to need to sort of build guardrails around this to protect people either from themselves or from AI doing something slightly different from what they perhaps intended?
Well, the way that I tend to sort of tackle this conversation is AI is a tool. So if you sort of use the analogy that power saws are brilliant pieces of kit that you can use if you're building a house and you need to be able to cut through lots of wood, but also it can chop your hand off if you don't know what you're doing with it and you don't appreciate what it's doing. But as a result of that, we don't ban power saws, right? We people can still buy them and people still make mistakes and people still have to go to hospital and bad things happen, but majority of people can use them safely. And I think there's definitely a learning curve element around that. With regards to the guardrails, I think that's interesting. I think, coming back to that point, it's a raw tool, right? A very powerful saw that can cut through wood, can do lots of things, and it can do a lot of damage. Typically you would want to use that in the confines of, building a house with a team of people that build a house. And it's similar in sort of like the software development world. I think where things are changing, and with a lot of the sort of tech teams I'm working with across all the PE funds, is that you're no longer hiring a development team to build a product. You're hiring a development team to build the factory that builds the product. So that's where all of the time and effort's going, into building those guardrails and systems around how it's supposed to work. What does good look like? What's a safe thing to do? What not to do? How I want you to check the things, so that when you sort of release raw material to the floor, to use the sort of the manufacturing phrases, it goes through that factory and it comes out as a quality finished product on the other side, something that you'd actually expect it to be. But if you've just got a load of people on the shop floor with a load of hand saws doing things, bad things can happen.
Jannick, thank you, Peter, that was really good. Jannick, I'd love to bring you on this, because you must have thought quite hard about this. And from what I've seen at Public, you've put quite a lot of thought into the sort of guardrails and the consent gates and so on to make sure that your customers are doing things knowingly. Have you seen any customers doing things that were potentially bad for them? Have you sort of had to sort of rethink a little bit your guardrails over the past sort of 6 months?
Yeah, you're right. We definitely have this brand of trying to be very fiduciary, very responsible, especially maybe not by European standards, but certainly by American standards, I would say. We've actually seen the opposite. We've seen that people are way better at risk management when they use agents versus when they don't. And I think that's one key thing to think about. Is it that agents will never make a mistake? No, but it's a little bit like the self-driving car movement. We're not coming from a world where no one makes mistakes. We're coming from a world actually where retail investors, on average, probably aren't doing risk management as well as they should. And so I'll give you a very concrete example. I tried to set up a strategy that was a martingale strategy, right? And so for the reader, if you don't know, it's like double if you're in trouble. It's kind of the casual way of saying it, right? So if you really, really believe in a stock, you think it can only go up. Every time it goes down, you'll just double your position. And then in doing so, you sort of bring your average cost basis down. Okay, so I tried to do that. And it checked me 3 times. Do you want to stop, sort of a maximum stop out here on the strategy? I said, no. It's like, are you sure martingale strategies can run really wild? Here is a scenario that you can end up in. And I said, no. Again, it's like, okay, Jannick, I really think you should do this. I see you already have drawn a little bit of your margin line of credit. I really think this is a bad decision. I implore you to reconsider. And then I caved. But basically, if you take that level of experience versus just having a digital platform, whether it's a brokerage or a robo-advisor, whatever it is, where you don't actually have the ability to even put up these dynamic, intelligent, personalized, just-in-time, in-the-moment guardrails. That does not really exist in any product experience. And so the way that you can nudge people to do risk management has completely changed. Because in the past, the best thing you could do is like have a couple of pop-ups come up. It's like, hey, have you read all the disclaimers? Do you realize, that this company is X, Y, and Z? And let's face it, sometimes people just like hit next. But in a chat conversation interface, you kind of read what's coming back, especially if you have to answer it before it helps you execute it, which is the case here. And so we've seen that, from a product strategy perspective, this completely changes how you can do risk management. And we don't have to live as a self-directed brokerage. We don't have to live in this world anymore where we're either being paternalistic, overprotective, or not having any guardrails at all. And it's just a Wild West. Now there's actually this perfect happy medium where we can just basically harness the models to very heavily over-index on risk management. But if you really do understand all the risk and you say yes that third time, even after you've been laid out all these different scenarios that could go wrong, then it's your own risk, and then you're happy to underwrite that risk, and that's something that you go into eyes wide open. And so the product strategist in me is incredibly happy with this movement because it just completely changes how you can, how you can sort of manage these types of scenarios.
That is such an interesting point. Sorry.
Can I add on to that actually, just a few thoughts on guardrails? Because I think it's such an interesting conversation, because I agree with what you both are saying. I think the nuance that's really interesting now is how control becomes layered, where the investor sets the goals and the mandates. The agent then operates within the mandate, and then the platform enforces the guardrails. But if those layers aren't audible, then control is more theoretical than real. But what we need to separate out now, I think, is that the problem isn't that an AI might lose money, because markets lose money. So the problem is not that, but it's when no one can understand whether the AI lost money when it was doing what it was asked to do, fundamentally.
Exactly.
And that's the real opportunity with guardrails, I think.
Oh, totally.
Fantastic. Let's take a quick break here, and then we'll come back to explore that point just after the break. So we're going to leave you on a cliffhanger while we have a quick break, and we will be back very shortly.
Starting a business can seem like a daunting task, unless you have a partner like Shopify. They have the tools you need to start and grow your business. From designing a website to marketing to selling and beyond, Shopify can help with everything you need. There's a reason millions of companies like Mattel, Heinz, and Allbirds continue to trust and use them. With Shopify on your side, turn your big business idea into... Sign up for your $1 per month trial at shopify.com/special offer.
Welcome back. So in the first half, we've talked about agentic investments, thinking a little bit about sort of control and trust and so on. And we want to move on now to sort of think about where the sort of value is created and where the value sits. And just before the break, Megan made a really interesting point about, whether you can audit AI tools and to what extent the returns they're making are intended or either by the agent or by the investor and so on. Peter, what's your thought on this? I mean, how much can we hope or expect to be able to sort of trace or audit some of these outcomes in a way that regulators might want to see? I mean, it's one thing if it's sort of people are giving agents fairly straightforward rules. It's quite another if they're saying, okay, help me retire 5 years younger or whatever. Do you think we're going to get sort of traceability? Does it matter? What level of sort of auditability do you think we need?
Yeah, well, first of all, I think we already have this problem with humans. If you go back to a fund manager and say, why did you do that? It's always a sort of a post hoc rationalization as to, oh, well, X, Y, Z, this is my reasoning, that's why I did it. Arguably with AI, there's a full audit trail that you can get. All the inputs, all the outputs, all of the prompts that went into it, any sort of supporting data and context and tooling that it used. To get to there, the only bit that you don't currently get is, the AI itself, the LLM is typically a black box model unless you're using your own that you've rolled and you've created the own weights for it. Interestingly, I think that's where things are going to go. I think there's going to be a massive decentralization in AI in the marketplace shortly, in the fact that models are being open sourced rapidly, and the cost and requirement for hardware is coming down to run it, I think you're going to find more businesses running their own, and they're going to be having their own proprietary models that they use to do things. At which point they will potentially have more defensibility in it. So I think that's quite an interesting area. But yeah, it is a bit of a black box currently, the way people tend to be doing it. Another thing that people could do is sort of have a multi-model solution. So sort of going back to the guardrail type thing, you have an agent that runs on one model with all the inputs, and it sort of makes a decision, and it passes all of that evidence and all the inputs over to a guardrail model that's running on a different model that makes the decision as to whether or not that's the right thing to do, and it accepts it from a regulatory perspective. That sort of model seems to be working quite well out there at the moment.
Oh, so you almost have one model to sort of check another model's homework.
Correct.
As a sort of second set of guardrails.
Yeah.
Very interesting. So how quickly do we think this will catch on? Obviously, Jannick, you're hoping the market's going to explode and people will embrace this. And by the sounds of it, that is actually starting to happen at some speed. Maybe Megan, what do you think? How quickly do you think we'll start to see people delegating investments to agents? How far do we think they'll go? I mean, from what you're talking about, vibe coding, clearly it's already happening very fast in some parts of the world. How quickly will this move?
Yeah, I think it'll move quite quickly. I think what we're seeing in terms of the kind of growth curve and adoption rate of AI has been so fast. And I would say the innovation rate has been so much faster within financial services than even digital was. And so I think that tends to predict that customers will continually adopt it quite quickly, especially since we have this precedent of customers already using, mobile digital products to manage their finances. We're already used to doing everything on our phone as it is. And so that kind of next leap to then interacting with an agent to manage finances is the next step. Within the UK, I think we're quite progressive on it as well. We've talked for years about this concept of having an autopilot, so an agent who can understand your current financial situation, can understand what goals you have, can help you figure out how to get there. There are certain things like utility management that have been quite well refined. So if you remember the Fintech Look After My Bills, they were all about helping you switch your utilities within a mandate. And that was really neat because what it did is it basically asked the user, like, if we can switch you among these providers and save you at least X amount of money per year after a cancellation fee, can we go ahead and do that for you? And the regulator approved their ability to basically sign contracts on the customer's behalf based off of a pre-agreed mandate, which kind of sets this nice precedent for agents who act similarly, right? The user sets the mandate, they have a clear intent, they have clear goals, and then the agent can act within that. They don't have to get pre-approval every time, but there is more of a continuous experience than we had before within the world of wealth and advisory, because you don't just do suitability once up front in a PDF. It's a continuous, kind of conversation and exercise. But that autopilot is something that I think is very much evolving. And that's a spectrum. So for some consumers, what you see is already quite a high level of comfort with interacting with agents for things like agentic commerce today. So already, a customer could go on and use an LLM to plan a holiday and book a holiday, and that's something you can do right now. And there are certain people who are very comfortable within that. And then using kind of additionally other tools around agentic investing and agentic management across other areas of their life. I think in terms of autopilot, what we'll see is some consumers who are more risk averse, and they basically want more control and input, especially on higher financial decisions. So maybe they're fine with utility management or portfolio management that feels akin to robo-advisory to them. So something kind of like a known extension. But, remortgaging their house, they would want to have input on. So kind of within the full financial spectrum of things an agent can do, there might be certain things that they want input on. I do think something that's kind of thought-provoking and interesting to think about is, and this isn't from me, it's from Mo Gaudat, if you know him from Google. I saw him speaking about this on Diary of a CEO, but he was talking about the rate of how intelligent LLMs are becoming. Like Elon Musk thinks that, within about 5 years, we'll have artificial superintelligence. AI will not just be smarter than any human, but then all of humanity combined. And he predicts kind of a dystopia where there's this point where the AI is so much more intelligent than we are, and yet we insist on human in the loop and the human making decisions and like having control and wanting to, prove everything when we definitely don't know as well as the AI. And so there will be like this dystopia first, and then at some point we'll kind of lean into a trust and a different model of interaction where we increasingly collaborate with AI in ways that we wouldn't previously do with technology, because it's not predictive AI, it's not machine learning. I think to Jannick's earlier point, like that was all really interesting for transaction monitoring and fraud, but it's completely different from what an LLM is, from what the reasoning models are, from what is possible now and the intelligence that's increasing. So yeah, I think it'll be adopted quickly. I think it'll be a spectrum. I think we might hit that dystopia, and I think at some point we'll have a higher trust and interaction model.
Jannick, I love that. I want to go in a different direction. What does this do to investment management and brokerages, right? Because if firms like yours are public, you're building this new layer of intelligent AI that can enable people to manage their portfolios. But for the last probably 2 or 3 decades, right? Competition between brokerages and investment management firms has really been about access to markets. It's about low-cost execution, and for a few firms, maybe a bit of customer experience. I mean, you can say, something like Robinhood's, worked really hard to create a good customer experience, but fundamentally, it's been about access to markets, low costs for investors. But if you're bringing in AI agents now, and you're, as you say, starting to change the whole way that people interact with the brokerage firm, does that actually shift where the value is created?
Yeah, I think so. It's not that we'll go back to charging commissions on stock trades, but I do think every technology had the birth of its type of brokerage, right? You had sort of the discount broker, the E-Trade era, right? When trading first went online. Saxo Bank, maybe my old employer was sort of maybe in that in Europe. Then you had the neo broker, I think people call it, with the shift to mobile. And now I think you'll see the agentic brokerage. But I think what's in the era of AI, obviously, but I think what's kind of interesting is both the discount brokerage and the neo brokerage was sort of like just about, first it became cheap and then became free, right? And so that was sort of the same trend extrapolated. As that happened, the way that you made it cheap and then free was also to reduce the responsibility set that a broker basically, like the role that a broker plays, was sort of diluted down to just trade execution, like completely do it yourself on everything else. And so the shift to agentic goes off that path and goes actually quite in the other direction. It takes you more back to more what I call like the full service brokerage model, which, back in the 80s, if you think back to Wolf of Wall Street, and don't necessarily think about that guy, Leo in the movie, but like there was a lot of other guys who did their job the right way as they should, and they were full service brokerages. They'd call you every other couple of days, they'd debate markets, they'd talk about risk, they've discussed things, they'd help you execute stuff. And I think we're going back to that, just not with a guy calling you, obviously, just with basically agents, right? So now, and I think it'll be that model on steroids, because now you can go and it's sort of reaching a little bit into financial advice, even quants, right? You can have an agent on public build your trading strategy in 5-10 seconds now, right? That the guy in the 80s wouldn't necessarily have been able to do. And so I think it is quite an interesting shift for our industry, because you go away from just every technology making things cheaper, to your point, but now it becomes more about like you can actually be a full service kind of model versus just doing only trade execution. To the second question on the adoption that you had, I actually think adoption ties directly into the accountability or the audit sort of question. One of the things we've seen is, every kind of new technology to some degree follows like this like product lifecycle curve with like, early adopters before it goes mainstream, et cetera. And I think we're seeing two things play out right now. There are people that take their own models, OpenClaw, et cetera, and they connect over API. And that's a very high risk model because you need to know how to mitigate a lot of the security risks. Obviously, OpenClaw can massively kind of hallucinate still and stuff, right? And so that's for the people who I really want to be cutting edge, happy to accept a lot of risk just to do this kind of first. And then now you're seeing stuff like what we're doing, putting agents inside your portfolio. You don't have to worry about security. You don't have to buy a Mac Mini. by the way that we've architected this is they can't actually hallucinate once you've agreed on a workflow. It runs. We've been able to separate sort of reasoning from deterministic execution. And so I think that is a model that helps take this kind of thing mainstream, because inside Public, those agents, you also have an activity feed and you can see everything that the agent does. So instead of logging in every morning and looking at my positions, the first thing I look at now is my agent feed, and I can see all the things that that my agents checked last night, in the overnight markets, in the pre-markets, and now this morning. And I'm not just seeing the trades that it made, but I'm seeing every time it checked the price anywhere, every time it reasoned about whether to do X, Y, or Z. And I think those two things just go hand in hand. The more transparency, so currently like OpenClaw and all these things like are pretty black box, the more transparency we can build into the agentic user experience when it comes to investing, the faster adoption into the mainstream will go. I think those two things will prove to be heavily correlated as we look back on this kind of 5 years from now, because I think that
Definitely.
black box model, I mean, the term black box in finance has never really been something that equated to a great outcome, at least not for sort of for consumers. And so I think that's a key thing to solve to get a real unlock in this.
And can I give just
Thank
one
you.
line on that? Because I think that's such an important point, that a black box is quite dangerous in this model. But I think the reality is informed consent in agentic investing should not mean consenting to a black box, but it should mean consenting to a bounded mandate. So that way, the user knows effectively what's going to happen, what parameters the agent can operate within. And so that way we get to more of like the glass box AI. To your point, you have the audit trail. They have a very clear bounded mandate. The platform's enforcing the guardrails. But that way, because the black box, to your point, is quite dangerous in this. But I think we can quite clearly shift to that.
Totally.
Yeah.
We've actually seen this like two magic moments so far. Like the first time is just set up the agent, right? And you're like, okay, this is cool. The second magic moment is you look at the glass box, you see the feed, and the agent did what you expected it to do.
Yeah.
And that's the second. and I think you gotta go through both before you can really. But once you've seen both, you can't unsee it. And then from there, you will use agents more than general app UI to run your
I
investing.
agree. Yeah,
I
that's
love
your
that.
point, because it builds trust so quickly, and that's what builds the adoption. So once they see that kind of
Exactly.
auditability in action,
Peter, when I was sort of first thinking about this, I was thinking, well, sort of naturally what people are going to want is they're going to want to beat the market, because everyone always wants to beat the market. But of course, everyone can't beat the market. It's impossible. Does this actually end up with people getting sort of custom personalized portfolios, a little bit like Jannick was saying with the sort of hypothetical sort of 1980s broker who managed your investments for you? Is this sort of enabling us to get private banking for the masses? And actually what that does is it means people who want to avoid investing in oil companies, or people who do want to invest in oil companies or whatever, everyone can have their own tailored portfolio, perform as it will, with transparency at remarkably low cost. I mean, is that where this goes?
Yeah, I wouldn't be surprised. I think some of the conversation that we've had is really interesting around sort of where we think it's going. And I think sort of like the full service piece is interesting because it relies on longitudinal data. It relies on the system having access to information about that's happened over time, and it understands you and your context. And actually, your context is entirely relevant to whatever it is that the agent's going to be executing on, whether it's financial trades, whether it's health, whether it's responding to your emails. So I think really where it's going to go is it's more likely that a lot of this is going to come back to the individual humans. I think it won't be long until people have their own AI agents that they rely on and start building and have over a long period of time. I've got an OpenClaw instance and another AI agentic harness that I built myself that, I've been working with for the last sort of 6 to 9 months. It knows my life. It knows me inside out. It understands my projects, my businesses, my finance portfolio, sort of people that I work with, my network. And so what I want that agent to be able to do is to be able to reach in and act on my behalf. And I think there's this sort of whole thing around, sort of going back to that point about sort of monthly active users and whether or not it's agents that are using your system. I think trying to keep the AI inside of a boundary and having lots of boundaries where you say, no, the AI operates inside of our bank. I think realistically, people are going to have the AI brain outside of it, and it's going to want to be able to reach in to transact. I think that's more likely to be where it's going. So sort of agentic B2A marketplaces and platforms, actually where agents go to work and meet each other to do things, is probably where the market's going to be going over the next couple of years.
Megan, what do you think? Agent to agent?
Yeah, I think there's a really interesting spectrum that's emerging. And to Peter's point, like, where will the agent sit? Is it external, like if someone has their Mac Mini and OpenClaw set up, or is it in the bank, or in different points of need? And I think it's a multi-pronged solution. But in terms of finance in particular, one way I see it emerging is that some banks are building agents internally, and there's a certain embedded intelligence that they're building in platforms around that. So as an example, at Starling, they now have Gemini as an agent internally. It's purely just for understanding your finances. It doesn't do like agentic investing yet. But that's kind of an interesting first experience of an agent inside of a bank. I think the next part of that is where banks do have a lot of unique information around transactions, identity, dispute resolution, around customer history that's useful for agents who are working with individuals externally, though. And that can be manifested by API. So I do think there's this element where rather than the banks having to do all the kind of financial, or banks or fintechs, I should say, doing all of the agentic investing and financial operations, it can also be a platform experience where they manifest that by API. Someone like Peter's agent could simply consume that API externally. And that way, that singular agent can still have the embedded intelligence from their other financial applications. And I think that will be really interesting because banks, they like the idea of consumers going into their app and using them a lot, but typically that's not actually what happens. People kind of go in to do the thing they need to do and check their transactions, and they're not usually the go-to user interface. So I think a really strong kind of evolution and maturity for the market is where they build out that embedded intelligence, manifest it by an API, and then the agents can consume it externally. And then I think the regulator's working on some really interesting things around it, like KYA or Know Your Agent. I think, to those points, it'll be, it's not monthly active users, but, monthly active agents, I think is a really good framing because now rather than consumers taking actions, it'll be agents taking actions on behalf of the consumers. And we do have a lot of rails in place, particularly in the UK and Europe with open banking and PSD2 to enable that to happen financially. But consistently, we're going to need more infrastructure around that and identity frameworks like KYA. And I think some really interesting things will come up around that, like agent-to-agent marketing, which will be really interesting as well. But I think there's a whole ecosystem around intelligence via API consumed by the agents interacting with other agents, accessing products on behalf of individuals.
And I think we're going to need a whole series of further podcasts on this because unfortunately we've run out of time. Because you three of you have been absolutely brilliant. I learn a lot on most of these podcasts, but boy, did I learn a lot on this one. The three of you are fantastic and wonderful. Where can people find out more about each of you and the things you're up to? Because I think everyone's going to be really interested in finding out more. Megan, where can people find out more about you and more about Caywood?
Yeah, the best place for me is really LinkedIn these days, just at Megan Caywood on LinkedIn, or you can go to caywood.ai for Caywood.
And Jannick, where can people find out more about you and public.com, though I've half said it?
Public.com is a good place. I'm also on LinkedIn, Jannick Malling. I don't know what my username actually is on LinkedIn. I was just thinking about this. At Malling on X, formerly Twitter, and at Public as well on X and LinkedIn. Yeah, the usual channels.
And Peter, where can people find out more about you and about HubbleField?
Yeah, as others have said, LinkedIn's probably the best place to find me. I write quite a lot on there, quite a prolific poster. And also HubbleField.com. Email address is peter@hubblefield.com, depending on what's drop me an email.
And you can find me, Benjamin Ensor, on LinkedIn. Thank you so much to our three brilliant panelists. You've been fantastic. Thank you to you for listening. If you want to join the conversation, seek us out on social media. Just search for 11FS or Fintech Insider, or you can email us at podcasts@11fs.com. So thank you all so much, and goodbye.